Hello, everyone, and welcome to this special webinar on decoding tokenization. My name is Piyush, and I'm thrilled to have you all here today as we explore a topic that's not just fascinating, but also incredibly relevant in today's financial landscape. What we have for you today is a first in a series of webinars that will aim to be your one-step destination for all things tokenization. Now, I've said this word thrice. What exactly is real-world asset tokenization? In very simple terms, it's the process of turning tangible and intangible assets like real estate, art, even commodities into digital tokens on the blockchain. This means that instead of needing to buy an entire property or a piece of art, you can own a fraction of it through these digital tokens. It opens up a whole new world of investment opportunities for us. And to delve deeper into this today, I'm joined by a very esteemed panel. Tapan Sangal is the director of Kalp Foundation. Luc Falempin is CEO and founder of Tokeny. George Agathangelou is chief operating officer and co-founder at IPMB. And Kapil Dev is chief business officer at STOEX. Let me start with you, Luc. The market for tokenized real-world assets is projected to reach an eye-popping $16 trillion by 2030. That's roughly 10% of the global GDP. That's massive. What's going on here? Why is this so big? What is it really? And what has changed in the last few years to get us to the point that we are at today?
So I think there is no limit to tokenization because any asset can be tokenized and will be ultimately tokenized. Why? Because it's just the same thing than financial products, but in a digital way. So if it's just better another format, why we would not use it, right? One of the issue of finance today is that everything works with silos. So in finance, everybody spends this time to reconcile data all the time. Everybody is doing the same operations and reconcile data because you have different ledgers. With blockchain, we can have one unified ledger, one shared IT infrastructure that everybody use. So everything will be faster, cheaper, more efficient. So of course it's different. It's a bit disruptive. So it takes time. But now the wish is there. I think all of the large players are starting to embrace the technology. Even Bitcoin is not a swear word anymore. So I think it's happening, and I think it will be massive.
And is that what you guys are doing at Tokeny? What exactly are you guys building there, and how does all of this fit into your scheme of things?
So Tokeny, we are some kind of access provider to this technology. So we provide technology to financial institutions, mostly asset managers, fund administrators, banks, to basically issue, manage, and distribute tokenized assets in a compliant way. So we build all of these tools to make sure that they can leverage this new technology for their operations. So we do this for more than 7 years now. So we are a very old company in the blockchain space with the same vision, which is to bring assets on chain. So we've done this successfully already with very different use cases. But now it's really where we see a lot of traction and adoption of this technology. So it's accelerating, which is a great thing.
So let me take this to George next. George, not just tokenization, blockchain has also come up 3-4 times in this conversation already. How important is for us to bring these assets on chain? Why is this the perfect solution for the problem that we are trying to solve?
Well, blockchain comes to solve a lot of problems by removing intermediaries, making everything more transparent, more liquid. We have instant settlements by using blockchain technology. So it is a new paradigm in the way that we control assets by recording every transaction, removing fraud, removing dependency on third parties. So it is the new way of doing things. As Luc mentioned, it's an innovative technology. It brings a lot of disruption in the space, and some traditional players may initially be resistant to it, but unfortunately the world just evolves and they will need to adapt at some point.
Absolutely. Tapan, for a lot of people who are watching this perhaps, or who are getting into tokenization today, the first question that comes to their mind is, how different is it from what is happening in the crypto markets? And it's imperative for people to understand how they're not exactly the same thing, but also the assets that, that are being bought on chain are very real. You can touch them, you can feel them, you can own them, you can literally live in them, right? So for somebody who doesn't really understand this as well, how would you explain it to them? What does it really mean to tokenize a real world asset? And from a regulatory perspective, how does that transfer from real world to digital?
Thank you for the question. It's a very valid and very important question. But before we get into that, there was something just coming to my mind when initially we started talking about tokenization. They say that money don't grow on trees, but under this new technology, you can tokenize that tree. So that's what tokenization is all about. You can tokenize anything and everything that you can touch, feel, like Luc rightly mentioned. And then when we are talking about crypto is just one of the use cases of blockchain. When we talk about tokenizing the real world asset, so the answer lies in these three words, real world asset. So there are assets which are already in existence. There are rules of ownership we are already defined in terms of legal documentation that you already sit with. If these assets are income generating, then the rules of distribution of those income is already established. The money comes to your account and all that. Now, when we talk about tokenizing that basically means you are digitizing the ownership, you are digitizing the rights in that particular asset. And for that, there are multiple things that come into play. If I would want to unbundle the entire tokenization process, I would want to talk about particular layers, important components. So blockchain brings in that element of transparency, smart contracts that brings in that element of automation. Then, there is a whole amount of legal engineering which is required when you connect a real world to the digital world, because the rights which currently exist in the form of documentation, how do you transfer those rights to a typical token or a token holder? And then it's not only transferring the rights to the token holder, that token holder should have the ability to enforce those rights in the real world. So while you are in the digital world, in the tokenization world, you cannot be oblivious of the challenges, all the rules which already are in existence in the real world. So the entire aspect of tokenization, you need to have a governance layer to empower these token holders to govern the entire asset which is getting tokenized. So, and there is a huge amount of free tokenization process also that any tokenizing the real world asset takes place. So there is a due diligence that happens. At the end of the day, any third party who's investing into some real world token, how would he know that the particular asset was in the ownership of somebody? So there have to be those all kinds of legal verifications, title assessment mechanisms, which are existence in real world. So the beauty is, how do you connect both from on-chain to off-chain, from off-chain to on-chain, and how do you connect all of that? And what is this entire, operational framework which is all integrated? So this tokenization, while we all are talking about tokenization, when we talk about tokenizing the real-world asset, it's a very complex structure. So I would say that, when people like us who are working on it, it's creating this infrastructure. It's like, creating plumbing. It's like plumbing for the future of finance, where nobody can, nobody actually thinks about until it starts leaking. Only then you call a plumber. But we all are putting things together and trying to lay down an infrastructure which tomorrow in a digitized world, where, governments like, or even the organizations like United Nations, they all are talking about that everybody should be digitally connected. We are going to be in a one huge digital world. There have to be these kind of tech that needs to be adopted for the purpose of bringing the transparency, for the purpose of bringing the trust. And that's where all these tech come into play. So I don't know if I was able to kind of explain or confuse the issue out here, but it's a beautiful tech. It's a very exciting time to be in this space.
Tapan, you're absolutely right. Before I move into, you've touched on something very important there, governments and regulations and United Nations and the whole world coming on chain via these. Before I delve deeper into, two words that we hear very regularly connected to this is DPI and DLT, right? So before I jump into that, Kapil, very quickly, what kind of assets, at least as of today, are we seeing that have already come on chain or in the market that people can already start to buy? And in the next, let's say, couple of quarters, how do you see the market panning out in the kind of penetration we see and the kind of assets that we see coming on chain?
Thanks, Piyush. I think the Luc has spoken in the first that everything can be tokenized. But when we are talking about the market, right? So when we say the market, it means anything which is potentially can generate yield, right? That can be tokenized and can be offered to the market participants to trade, right? So traditionally, we have two type of market. One is the pure established financial market where financial instruments like equities, bonds, and few of the commodities in the derivatives markets are being offered. In last few years, we have seen evolving of one more set of market, which is in the form of crypto. And now when we are sitting here today, there is one more market, which is the tokenization. But if you see the tokenization and the capability it has, right? It's not only about, of course, tech is an important thing that this entire infrastructure of tokenization is built on the tech. But what it is doing, it is adding value to the existing market, right? So investment in the assets which are less liquid, but traditionally they are being invested, real estate, gold, silver, any of the commodities you name, energy products, carbon credit, right? It is being there for ages, right? Even before we know the financial markets exist, even before that investments are being made. But that investment is somehow is not democratic, right? Only certain set of people have access to those kind of commodities. They have access to that kind of infrastructure. But why not other people who have an appetite to invest and appetite to understand the asset class, and they are interested to invest? So I think the horizon of investment should increase, and tokenization is going to pave the way for that, right? If I want to trade any of the commodities, like let's say agriculture commodities, right? Most talked, most followed, most touched every day. We interact with agriculture commodities multiple times, various way. But are we able to invest? Maybe not, right? Let's say gold. Are we able to invest gold freely? Maybe not if you go to the existing products like physical golds and jewelries, but there has to be a way where whenever I want, I can go, I can invest, I can choose the asset, I can diversify my portfolio. So coming back to your point, tokenization is making it happening, right? I today can think of investing best of the building built in Dubai with minimum amount I can have, right? Not the maximum amount, right? I need not to fall into that elite category, which makes me eligible to invest in any of the asset class. So I think democratization, which tokenization is bringing, is absolutely amazing. Accessibility, which is giving to me, a general investor who can think of, not investing in the traditional class, but I can invest in anything where I see the potential. So I think anything can be tokenized, commodities can be tokenized, and you sitting anywhere in any corner of the world can decide that which asset class I find feasible for my portfolio and invest in a much more democratic way.
Thank you so much. You've given me a couple of great follow-up questions, but first, one of my favorite words, democratization of everything. One of the things that we all started to do when we entered blockchain in true sense was we wanted to democratize just about everything. To some level, I think RWA tokenization could be that torchbearer that actually makes it happen beyond the cohort of token holders that we have sitting in the crypto space today that are built on blockchain, right? George, you have spoken about the role of digital ledger technologies in the past. How does that shape in? And what kind of, it's very easy to use the word democratization, but what does it really mean apart from getting people to invest in certain type of assets when it comes to RWA tokens?
I would say that it's very important to bridge the traditional finance with the new age finance, which is crypto assets, distributed ledger technologies, and so on. So we need to have, first of all, the regulatory clarity for that to take place. We need also to consider the various protocols out there and ensure that we have interoperability between those protocols, and also always to protect investors in the end of the day. So when we're referring to tokenization, there needs to be some element of centralization. It is necessary because we are discussing about real world objects, tangible assets, and you need to have security around them. You need to have custodians. You need to have auditors checking the existence, the quality, the quantity, and so on. So it all comes to blend together, and there are a lot of challenges that need to be addressed when it comes to having the right approach, when it comes to the various standards, the classification of these assets, the compliance, of course, with global regulations. So I believe that we are still very early when it comes to the tokenization of real-world assets. However, in hindsight, it will be inevitable.
Thank you. Tapan, you are a lawyer, so you are possibly the best person on the panel to take what George just mentioned too. Regulatory compliance, security, building transparency, investor protection, etc. It's paramount for the success of what this industry is trying to build, right? How do you see? I'm not going to ask how do you see what's the role of regulations. That will be a very bizarre question. But how do you see these regulations playing out, A, at the global scale, and B, for most of the companies building in this sector at a more regional scale?
So I would not say it's a bizarre question, because I would want to address that question from a regulator's point of view. If I wear a regulatory cap, what does a regulator want? Regulator want at the end of the day security for the investors, the investor protection. That's the paramount thing. There is a whole lot of debate happening that regulators, when regulators open a sandbox for a new tech to come into play, their mandate is not to promote a new tech. Their mandate is to protect the environment. And so it is for the inventors. So, if I may, like at Kalp, at our blockchain, our thing is that we are regulated by design. So what we did, instead of waiting for the regulators to come out with a regulation, all the regulations on the real world are already in existence, if I may say so. All you needed was, how is your tech enabling all those? So whether it is automated KYC and AML verification, whether it is, how do you digitally represent the legal right? How do you block the asset in the real world so that when you transform it into the digital world, that asset stands logged? Okay. So regulators are also closely watching. They also don't know everything. They need to learn from us. And if we are the flag bearer for this new tech, and we are, bringing in, and like I mentioned, we are putting the plumbing infrastructure for this entire thing, we need to be also conscious that what is the mandate that the regulators are running. So the mandate for the regulators globally. So currently, if I say, so there is some, if I may use the word, there are some politically motivated mandates. So one is, if you would see, there is a huge amount of regulatory activism going on globally. Suddenly each country, each regulator are saying that if you want to sell tokens to my citizen, you register with me. So if you want to sell tokens to Indians, you need to register with FIU. If you're wanting to sell tokens to US citizens, you register with SEC, so on and so forth. Of course, the underlying definitions, whether it is a security or it is not a security, whether it is utility or not a utility. But if we talk about a real world asset, so in India, while they came out with a regulation saying that anything and everything is a virtual digital asset and hence you will be taxed, they came out with a notification where they say that if that digital asset is real asset backed, so a asset backed token is not a virtual digital asset. So they have created a carve out of course, there are a number of other nuances to it. So the regulators are also learning this, the entire space is evolving. We have to also walk a certain mile, and the regulators are, I see, also opening up. I mean, when we are going, we ourselves are going to various jurisdictions. We are going to US, we are going to Mars, and we are going to Europe and MICA, we are in India, we see that, when we analyze all the jurisdictions, the regulators, the baseline is same, okay? It's only some of the other aspect in each of these regulations which you need to tweak a bit, okay? But at the end of the day, as long as you're able to demonstrate that you are committed towards upholding the law of the land, they would just love you. They want to embrace the tech. They would want to, so as long as you are transferring the governance and how that governance is being transferred to the token holders, what is the kind of depth of control that you're giving the token holders, these are the things that in any case, for a long-term sustainable model, you need to bring into your tech, and then layer it with the ask that the regulators are globally working upon and help this industry grow together?
Regulators are going to love you. I think every founder wants to hear these magic golden words at some point very soon in their journey. Luc, let me come to you. What does all of this mean for the customer? Does it mean that the way things stand today, products are going to be built regionally, or are products going to be built globally? Because, how does it truly democratize itself unless I am sitting here at some part of the world being able to buy these assets anywhere in the world, right? If products and if founders have to start thinking of setting up entities in different parts of the world to be able to do business there, then that doesn't really help the cause of democratization in that sense, right?
Yeah, exactly. And even if I am a strong believer that at some point tokenization will democratize finance, there is a very long way to get there. Why? Because when you have a revenue streams or ownership with co-ownership with multiple people owning something, usually what you do is creating a legal entity to protect these shareholders and to define rules and to define taxes, etc. So there are securities. We want it or not, but there are securities. And actually, that's a simple way to do it is to just do securities. For 7 years, we help a bit more than 150 clients all around the world doing securities, and we tokenize the securities. Therefore, you can tokenize pretty much everywhere because anyway, you have rules for securities. As long as you can enforce them on the blockchain, as Tapan was saying exactly. If you have the right tools technically to enforce these rules, you can tokenize securities everywhere in the world. Unfortunately, securities are not very open for retail investors. To protect retail investors, we tell them, if you're not rich enough, you cannot invest. I think there are some limits to reasoning, but it is pretty much everywhere in the world. So it will bring more transparency. It will be much cheaper to manage high volumes of investors in one single product because everything is digital. The KYC can be digitized. The cap table, the transfers, all of this can be automated. So it will help to lower the barrier of entry, but we'll still have rules, and most of those rules will still prevent small retail investors to invest in assets. So this is for securities. Then you have different type of things. For example, commodities. Commodities are very opaque. It's not a very transparent market. In general for commodities. So I think this type of product can be much more democratized thanks to blockchain. We have projects tokenizing old gold, palladium, oil, forest. I think that's great. Bitcoin mining, energy, all of these new things I think are great investment opportunities. But it will mostly help the qualified investors, accredited investors, family offices, high net worth individuals. They are the main one who will benefit from it before the retail benefit from it. So it's already a progress, but it will take some time.
Yeah, that's very good to know. George, at a government level, what is it that the governments can do today to create a very conducive environment for these businesses to flourish, or for multiple companies to come in and startups to come in and try to create entities across board as opposed to tying them down at individual state level?
Well, there are certain things that we can do. We can also incorporate certain standards. So when it comes to the ISO organization, the International Standards Organization, I personally know some people that are working into implementing some standards on a global level. We can also look into decentralized identity solutions and ensure compliance with KYC and AML while protecting also the privacy. We also need to look at automated compliance tools that can be used and enforced. Looking also at the various token standards, perhaps with built-in protections for the investors, and also prepare some regulation perhaps when it comes to custodial or non-custodial solutions for these assets. Maybe even enforce some dispute resolution mechanism when it comes to various breaches of contract or fraud. Insurances around those assets is also an important element that needs to be considered. But I would say the most important thing is to start with education, to start with awareness, and empower investors when it comes to making all the informed decisions around these new assets. So what we notice is that investor protection in the tokenized markets is mainly driven by technological tools, and governments have the responsibility of improving, let's say, all of these solutions, establishing some standards to how this industry operates in the end of the day, create the regulatory sandboxes, and provide some regulatory clarity. Right now in Europe, we do notice a new regulation coming in place, the markets and crypto asset regulation, which is basically a new version of the markets in financial instruments directive. We also other jurisdictions like Dubai, Singapore, they are leading the way when it comes to regulatory clarity. And we hope that soon we will be able to coordinate, let's say, on a global level as to how these regulations are going to work, and how governments can actually work together and not stifle innovation, but promote innovation, promote clarity, and help the democratization of digital assets. So I remain optimistic that this is very possible to happen, especially after, let's say, the developments in the US, where we see a new crypto-friendly, let's say, government coming into place and perhaps changing the environment on a global scale.
That's very, very well said. Kapil, you know, the guys in Europe and US have had a little bit of a head start in pushing this out, right? What you are building is essentially you're building it for what is possibly going to be one of the biggest markets for tokenization in the world, India, right? How do you see this playing out here back home? You know, what kind of assets are you seeing that people are going to be willing to jump on almost immediately? And how do you see this panning out, let's say, over the next 2 to 3 years in countries such as India, Indonesia, all of APAC, etc.?
So Piyush, if you see, not only India, but the entire world, every market have seen this phase that they have moved from physical to digital, and now we are talking about digital to the chain, right? And while the market keeps on building up, a lot of innovation keeps on coming. But the important part here, especially if we talk about India or any other growing economy, that digitalization pace is much faster, right? In India, if you go to Amazon, Flipkart, any of the e-commerce website, you can even buy today, right? You can buy various other things which you have never thought of buying digitally, right? It's buying digitally and getting delivery physically. It's somehow kind of tokenization. You are not investing, you are buying, right? Here we are also talking the same thing. Government is pushing a lot to digitalize everything which they have, right? We have seen the biggest success while the money is being digitalized through UPI. Now all the payments are digital. We are talking about digital currency. We are talking about digital record of everything. So we are this entire concept of tokenization is actually in sync with what government is doing, correct? Of course, it will take little time because getting digitalized and offer to trade is a two different thing. I think the first concept, there is no doubt that we are going to see much faster pace even for India, right? We have seen governments talking about digitalizing the entire trade of commodities, digitalizing the supply chain, digitalizing the record. We have already done the credit card tokenization. We are talking about blockchain based tokenized KYC. RBI is talking about. We have seen various papers by Gift City, by SEBI, who are talking about tokenization. I think the first part is going to be much more quicker, where we convert with digitalized on chain, so it's automatically get tokenized. Now we come to the second part, which is a little more tricky, because we are talking about investment and protecting the investment. I think that things will take little time, but anyways, we have seen now markets building up over a period of time. We have seen how we have moved from physical gold to digital gold. India is the biggest market for digital gold. We have seen ETF, we have seen digital gold, we have seen gold bonds ran by the government of India. We are seeing digital silver now coming up. We are seeing digital diamonds being traded now. So almost everything now we can. And we have seen I think a massive development in the form of crypto. Right? What now? I'm not saying what is right, what is wrong, either in favor of crypto or not, but that has shown that how an innovation in digitalized world can lead a way of new class of financial market. So India has remained pioneer in term. We are the largest financial market now. We have seen new instruments quickly taking over the Indian financial market. We are the most traded derivatives market now, right? Even the regulator is saying, please hold on, right? If the market is too much liquid, let's not trade options, let's not lose money. So I don't think the RWA tokenization is actually the best way to divert the attention of traditional investors from maybe various speculative market, various speculative asset class to much more stable, much more defined, traditional, well-established asset class. You just need to hold their hand and say, okay, come here. We tell you, we let you invest in these assets which you could not in digitalized way, in safe and in secure way. So personally, I am very bullish. I do see everything getting digitalized, tokenized in next decade, and maybe what maybe crypto was in 2010 or digital gold or digital silver was in 2012, 13 when everybody was talking about, and everybody was saying, no, it's not easy, it's very difficult, it's very complicated, how to protect, how to manage the data. We are at the same phase after 10 years. If we again, five of us connect, we'll be talking about that, how to get investors, maybe little controlled when while taking the tokenized marketplace. So humongous opportunities I do see, Piyush, and landscape is very, very big. And we are just getting ready for that.
In 5 years, I would have definitely lost some of my hair, but from my head, and probably a lot more whites. But I'll definitely arrange for a panel in some time.
But maybe you will be having a lot more tokens.
I will be having a lot more tokens. That's true, and global tokens at that. Tapan, one thing that I wanted to discuss was digital public infrastructure, right? How important is that in what RW assets are trying to create? How does that help bring in, the next couple of 100 million people on chain and onto, this new asset class that they've never really had the opportunity to invest in?
So let's understand what is digital public infrastructure. Digital public infrastructure doesn't necessarily mean an infrastructure which is done by the sovereigns, by the countries. It's basically infrastructure that connects the world, bringing together. So for DPI alone, UN has come out with a list of 45 nations which they want to lay down the digital public infrastructure. Now, blockchain is a very, very important part of this digital public infrastructure, because what it does is it brings that element of transparency and that brings that element of trust. So while people are doing it in pockets, but this digital infrastructure, what it would basically do is it would give access to the existing people. So what is a digital infrastructure? So ID for a person is an important part of this digital public infrastructure. Now, digital ID or an ID, so that's one basic thing, one ID across the globe. You don't need a passport or you don't need anything else. All you need is one digital ID, which is on some blockchain, and then the world can know who you are. And then not only that, we are living in a world where everybody is talking about protection of your own data and all that. Blockchain, what it enables is it enables you to pass on a need-to-know basis what your identity, the part of your identity. So if your identity includes your age, your name, your address, and all of that, and just to give you a crude example, in a bar, if the entry age is 18 years, the bar owner just need to know that this person is more than 18, okay? He doesn't need to know his name. He doesn't need to know where he's from, his address or anything. So this digital identity as part of the DPI. Now, second is your own wallets, your own self-custody wallet or your own account, then your personal records, all this. Governments at various levels are working, like in India, the Aadhaar card, which is our digital identity. It's a huge DPI, or UPI, the payment transfer mechanism. So currently we are working with a group of nations where we are trying to put together a transaction corridor between those nations. So for transacting cross-border within these 3-4 nations, we are living in a world where we have multilateral treaties or bilateral treaties. At least within those two nations, their values could transfer, and if blockchain can come as a part of the DPI. And for that, So that's where this DPI, the entire DPI aspect comes into play. And if we talk about DPI as the base layer for tokenization, is where you could connect the rest of the world also, because once this DPI is laid, you have created a distribution channel where these assets that you have created, like Luc mentioned that right now it is the QIF and others, I would say what tokenization does is tokenization creates these wealth creating instruments, which were earlier available to the people with the loads of money, only they can invest into that. But when you do tokenization, and because you are able to fractionalize, you have these smaller things. So a person today, if he has a small amount, say $1,000, how much money he can, there are these instruments which are, if they are fractionalized through tokenization, which are giving an yield of 9%, 8%, earlier the guy who's just having $1,000 in his account could not have earned that kind of money. But with tokenization, he's having access to that kind of a thing. My favorite thing is they all say that you should not put all your eggs into the same basket. But through tokenization, you can own 0.00001% of each and every basket. So at the end of the day, that's what tokenization would do. And DPI is the base infra that governments have started. I mean, Singapore has a DPI aspect, G20 nations, they are working heavily on. So we who are working on the blockchain side need to take this tech and, give it to these nations so that, their DPI can integrate with this system. And then 2 years down the line, 3 years down the line, 1 year down the line, when the regulations are all settling, you have a connected digital world. So layer 0, which is your internet and computers, are all there. Big companies who have come and laid down the internet, pipeline. You have our Elon Musk, who's talking about through Starlink connecting the whole world. But then when these worlds are connected, they either are we talking about Web 2 or Web 3, which is decentralized. And that's where this DPI needs to be integrated. So that's how I look at it. The entire, like in our tokenization case, automating distribution of yield and rents, from a tokenized property, how real-time value updates, all these things, oracles in place, integrated. So DPI is a base infrastructure. So blockchain is also, I would say, part of the DPI. That's a base infrastructure on which multiple apps are happening.
Okay, thank you so much for that, Tapan. But just a couple more things that I wanted to touch before we wrap up the really fun session. George, a couple of assets that have gained popularity already, 2 of them would be real estate and gold. Now you have already managed to, correct me if I'm wrong, tokenize gold. What has your experience been? How have you managed to do it? And what kind of reception are you seeing in market, about it?
Absolutely. So with IPMB, International Precious Metals Bullion, we have tokenized a significant part of gold, and we are basically the first vertically integrated gold tokenization project in the world, meaning that we have direct co-ownership of gold mines in Ghana. And we are utilizing a dual token mechanism where we have IPMB token, a hybrid utility and payment token, allowing people to stake their token in order to receive discounts for the GEM NFT. The GEM NFT is a digital promissory note for physical delivery of gold after 12 months, making our ecosystem the lowest cost gold acquisition platform in the world. Moreover, we are working now to create a traceability solution by combining blockchain technology with IoT devices as well as artificial intelligence in our processes in order to provide full traceability, full auditability, outlining the ethical mining practices, then recording every step of the supply chain from the gold leaving the mine, going to the smelting facility, then to the refinery to become an LBMA certified 24-karat investment grade gold, and putting all of that interaction on chain. So it's quite an ambitious plan that we have, but we are working very hard, we're building it, and hopefully within 2025 we will have our first minimum viable product and be able to show the world how these new technologies can actually improve the way that we live, provide transparency in all the operations, and change a little bit how the gold industry has been treated by banks, because it's all considered as high risk. With our solution, we provide full auditability, verifiability, and giving all the information and the power to the end investor. So the way that it would work, the end user would receive an NFT, and the NFT would point out to our database, outlining every single interaction and recording that on chain. So that comes to prove the power of these technologies with distributed ledger technologies, IoT devices, AI, all coming together as one in order to provide new services and new products to the end user.
Thank you so much for...
Piyush, if I can just congratulate George, but this is precisely the DPI kind of DPI that I'm talking about. This is the digital public infrastructure, which is based on blockchain and the kind of transparency. Once this infrastructure is laid down, imagine the kind of gold that can be routed through this infrastructure. So these are all nothing but those distribution channel, two-way distribution channel, which not only brings in transparency through IoT devices, you can track. There are trackers. This is the kind of DPI that we, from a private sector, should be working along with the government sector and laying it down throughout the world. Imagine the kind of world it would be once this entire infrastructure, interconnected infrastructure, is all laid down.
Absolutely, Tapan, and thank you so much. We are starting with gold as a precious metal, but of course, the know-how can be transferred into other industries. For example, the food industry, and keep public safe from harm, and many other examples of use cases. This is just a pivoting, let's say, the first stage implementation on something that is very valuable, like gold.
If I can share, you mentioned food, where a company is doing one of the POCs with one of these meat providers, where when you buy meat personally on a retail level, you're not sure what was the temperature of this meat from where it originated till it reached you. And through IoT devices, which are going to ping the temperature at each and every 1 minute or 2 minutes, and you can track actually each and every household can track the exact state of the meat, from where it was produced till it reached them. And imagine the kind of world we are talking about.
And if something goes wrong, it's so easy to track and trace and recall the bad food from the market.
Absolutely.
All of this for the end user. And just on that, I want to take a very interesting question that has come from one of our audiences that are watching this. So, let me throw that to Luc. Tokenization is the future. Everyone is saying that, right? The question is that what is the cost of this tokenization? Like security, trustee charges, etc. And will it have a significant bearing on the adoption by the end user?
So it's already cheaper to manage tokenized assets than standard assets. So I'm not saying that we removed a lot of intermediaries yet, but they spent way less time to reconcile data, as I was saying at the beginning. So it's just much more efficient. So this is supposed to lower the cost. It's not the case yet. For the moment, you have these asset servicers who just make more margin because it's not widely adopted yet. But step by step, the prices to manage securities, an investment fund, for example, will lower because everything will be digital. It doesn't mean that the intermediaries will make less money. They will just have more margin, and mostly you will have more operations, more transfers, more investment, portfolio management globally. Because today, when you invest in an investment fund, a closed-end fund, an alternative fund, for example, you're usually blocked in this fund for 5, 7, 10 years. You cannot exit, or it's very, very costly and takes a lot of time. So if we tokenize all of this, we'll see more transfers, more things to do. But of course, it will be cheaper per operation. So we're really saying that part of the value proposition is to lower the cost. So actually, that's what we've done already to lower the cost for asset servicers and issuers. And now it's really about bringing value to the buy side. Okay, I get a tokenized asset. What can I do with it? So it's DeFi, secondary market, collateralization, and all of this is still to come. There's some stuff already in the market, but it's it's just the beginning. So we are getting there, and that's the exciting part, because cost reduction is not exciting. It's needed, but it's not exciting. So now I'm very happy that we finally bring value to the end users by publishing all of these applications. You're in mute.
You're on mute.
Sorry, of the couple of future products that you mentioned just now, which one of these asset classes do you see being tokenized in the near future, or the market accepting very aggressively? And with that, I mean next 6 to 9 months.
The question is still for me? Yeah.
Yes.
Yeah, sorry, I was not sure. So we see our clients tokenizing really everything. A lot of funds, investment funds, mostly because you can package anything in a fund. We see equities at the end, especially small equities, because you still need to assess the opportunity. You have complex shareholder agreements, so it's complicated to tokenize. So funds for sure. We do also more and more fixed income, and you can automate a lot of things with fixed income. You know what is the maturity date, you know, sometimes the interest rate, etc. So I think that's very interesting. So trade finance is a great use case where you can really bring volumes and have a regular influx of tokens. So that's the main two things: funds, closed-end funds or open-ended funds, and fixed income. And then we have also a lot of commodities, but I'm a bit less an expert in these areas. I just know that we have clients tokenizing billions and billions of dollars of commodities. So it looks like there is a need for commodities to be tokenized.
You know, that sounds billions and billions of dollars of anything in business sounds wonderful. Before I end this up, I'm going to ask all of you the same question and go around the room to get your answers. You're all founders and leaders in this industry. How easy has it been for you personally to build the products that you're building? How easy or difficult has your journey been? You know, regulators, market conditions, they don't necessarily make it easy for founders to build at scale immediately, right? So let me start with you, George. You know, what has your journey been like, and you know, how easy has it become?
Well, I would say that it is a little bit difficult. It needs to be, you need to be consistent. You need to be out there in the market, gathering all the information, keeping abreast with any regulatory changes, any regulatory updates, communicating, networking with like-minded people. So I would say it's a challenge, but a quite interesting one, an enjoyable one. I am very optimistic about the future of the space, and I hope for the best. I do believe that whatever can be tokenized will be tokenized, and that this is just the start of a wonderful journey ahead when it comes to tokenizing real-world assets.
That's very positive to know. Luc, has your journey been similar, or has it been a little more topsy-turvy than this?
So on our side, we never really got issues with regulations and regulators, to be honest. I mean, the challenge is to educate them, but it's what we do with our system is to make sure we can bring control and compliance on chain. So actually, we are always very well received by a regulator. When we tell them, look, what we can do, you will know exactly who is doing what. It has nothing to do with crypto, where the tokens are on chain and nobody controls them. In our case, we know exactly who is the issuer, who is the agent, who are the investors, who is doing what, because we apply those compliance rules directly on chain, thanks to on-chain identities. So it's really about education on that side. So the main challenges we faced were to convince financial institutions that this technology could be better than what they use today, and that it is different, and they have to accept it is different. Because the more they try to replicate what they do today, but on chain, the less it works. It's just different. You don't do the same thing at the same time. So this took a lot of time. It's still ongoing, but at least now they want to change. They want to upgrade. They know they have no choice anymore. So now it's just a matter of time.
Kapil, what advice would you give to founders who are starting their journey now in this field and who are going to start building the next set of products in this bull market that's coming up, right? What advice would you give those guys to, you know, for the next couple of years?
Oh, I think consistency is something which is very, very important, right? Once you have an idea, then you have to close that idea, right? It's a complex market because you are saying from day one that you will disrupt the financial market, right? And nobody likes disruption, especially the financial market disruption. So there are a lot of complexity which come, but I think that's a problem which is good to have, because more the complexity is, it means more the accepted solution you are going to offer. So once you know the complexities, I think you have to be consistent on the solution which you are building up. And of course, it's a financial market. It has a lot of eyeballs every day, every minute, towards what you are doing, how many people you are engaging with, how much money you are transacting, how you are making people are protected, how you are ensuring data security, how you are ensuring conflict of interest, everything comes. And but I think these are good to have problem, because once you solve these problem, you are at par with any regulated financial market. So I think we have to just be consistent. We have to keep tracking what regulators are doing. Regulators are good to have. We definitely cannot say we don't need regulator. and they have their own pace. And because we all are tech, we have our very different pace. We want to, run 5 times faster than what regulator wants. So slow down a pace bit, be consistent. We are not here for a day, for 2 days, for 5 days. We are not building a short-term solution. We are going to build a solution which will be adopted by millions and billions of people, and that are going to be there for maybe for a century at least to begin with.
That's excellent. And on the regulators bit, Tapan, I think I've saved the best question for the last one. With your experience and background in regulations and law, would you, and what would that message be if you would want to give to the regulators? Because regulatory activism works differently in different territories, right? So if I were to ask you to give a message to regulators and the governments who are actually going to be governing and framing these for the next couple of decades to come, what would your message be to them?
We are coming. We are here. We'll stick to our plans. So please adapt.
So please adapt. I mean, as bullish as that gets while we are ending 2024. Thank you so much for this, guys. It has been an excellent conversation.
Just want to add from what Tapan has said, right? I think the regulators globally have failed to read what crypto market could do, right? And it was ignored, it was rejected, it was not accepted by many of the people. And now it has reached to a level where you have no other option than to regulate it, accept it. And when you see others market, which now you see the successful market, whether it's Board of Trade, CME, ICE, wherever you go, they took 150 years to reach where they are. Crypto took only 10 years. Maybe tokenization market will take only 5 years. So this need to be changed. Acceptance has to be improved, and dialogue has to be started in much more open way, rather than rejecting, rather than creating resistance. Let's discuss, let's identify the common solution and move forward. Sorry, as a business, I have to say that.
If I can be cocky and say the regimes would change, and we just got us in the example. So yeah.
Like I was saying, as bullish as it gets.
Sorry, just one last point, Piyush, and I think it's very important that we talk about it, that what George has said, that it's not only about trading, it's about tracking the asset, how it has been generated. And one more important thing which is building up is the energy product, especially carbon credit and these products, right? These are intangible. The entire validity of asset, which the entire world is now saying that it has to be, this will be the largest commodity to be traded after 10 years. I think these type of innovation, which we all are discussing today, will be very helpful in those kind of product like energy products, and especially when there are global trades happening. Europe is buying CER, we are producing CER. So traceability, auditability, trackability, and tokenization become very, very important. And you will see these markets building up on the chain itself rather than going into the traditional way of market development.
Yeah.
Sorry, Piyush, interrupting you.
No, absolutely. No, I think the larger message that I get out of all of you is that this is a very bullish time for us to be in. These are the products of the future. There is absolutely no stopping this train, come what may. And, I think the estimation of 16 trillion by the end of 2030 seems to be a bit conservative. If I have, if I go with what you guys are saying, and, but, hopefully we have 5 or 6 years to go. And as you guys have promised me already, we're going to be here to discuss post-mortem of what we managed to do by 2030 again, with lesser hair on my head and possibly the same with yours. On that wonderful note, guys, thank you so much for tuning in. Thank you so much for your time today. This has been a very enlightening conversation. For everyone who's watching, if you want to refer to this again, we're going to be hosting this on our YouTube channel, and there are more of these conversations coming up. Stay tuned, and thank you so much for your day. Have a good day, everyone.
Thank you. Thanks, everyone.
Thank you. Thanks, everyone.
Bye-bye.